Greetings, market rebels. Welcome to this week's macro measure video combined with our sector situation video. It is Friday, July 11th, 2025, and I believe it is, what time is it? It's a little bit after 2:30, about 2:35, I think. Here is our trusty market rebellion disclaimer. By the way, I'm Wayne. A lot of you know that. And then here's our trusty intellectual property rights notice as well from Market Rebellion. And then here we have last week's slide that's been highlighted. I'll get the laser pointer. We'll rip through this and we'll get into this week. So I think the good things that we mentioned last week were that you have these drivers right now. I just kind of took account of those. And then we talked about kind of maybe like a lull to vol situation right above that. And so that is something that sort of played out a little bit, at least in my mind. I'm jumping ahead and I'm coming back because you can see I'm now saying maybe we should ask the question if we're on the eve of volatility. That's this week's slide, which we'll come back to. But that's what I'm thinking maybe is about to happen here because I don't think there's anything brilliant about that, by the way. But we didn't really have a gangbuster week. We did, I think, come in with a most likely scenario where we thought it made sense, again, with a news neutral assumption that they chill things out a little bit to start the week. And then as they get towards the end of the week, right into the middle of the end of the week, they try to start lifting things again. That's been the general pattern. Just the way that the charts have set up with them ending weeks overbought and needing a little bit of a pullback to cool things off and then go right back to gamma squeezing and short squeezing and all the other things that we've talked about over the days, weeks, and months. So that was probably worth noting. I think we have this mix waiting on EPS. That was another little reminder where we said we saw some real potential in some of these mega cap names. And so we thought that maybe, they would be waiting on the EPS to really maybe start boosting them, or maybe just in front of EPS with the time tested pre-EPS run, as I refer to it as. The ZH tab I'm highlighting, that was the one where we talked about the AI situation and how that really is starting to kick in terms of productivity, or so it seems. Remember, that was as per a zero hedge story that we brought up, keeping the tabs to a minimum. So some that are gluttons for punishment, they may recall the good old days of super long videos that I had when I had more time and I was getting away with it. And I'll talk more about that in a little bit. We talked about the breakout attempt, and we talked about it's getting too easy. And we may have brought up the CNN Fear and Greed AAII just in time because we hadn't brought those up in a very long time. And both of them were kind of I would say in relative terms, they were kind of in a little bit of a overdone level. They were at overdone levels. And again, that might have reckoned with some folks. Some folks may have realized that. And so maybe that's another contributor to the lull that we had earlier in the week. We talked about Trump trade deal volatility that we'd had to be ready for. Of course, Trump just can't leave things alone for too long. And so he started up with some of his time tested shenanigans on that stuff again. So that's just part of being, the days of Trump. It was that way during the first time Trump was in the White House, and it's happening again. So we talked about the quibbles that were there, but we also talked about some things that were looking pretty good in terms of the sectors and breadth. But overall, they really were quite good. And we talked about yeah, you could pick a couple things apart, but overall, they were quite good. We talked about BTC and crypto nearing the starting line, looked like they were ready to start rumbling, and that happened late this week, so that was maybe worth mentioning. And I'm still beating the dead horse on the Spidey sense, but I can't help it. I've got to go with the flow. When I start getting that sense, it just happens. And I haven't really been doing the news coverage that I used to, just due to time constraints and all kinds of other reasons. But So, it's not really the result of me keeping up on every little risk factor out there. It's just a sense. So, anyway, that is the um, be on guard reminder, was really kind of due to that and where we were left technically. And then EWLW, I think I added for early weakness, and then late week resumption. So that was kind of part of the whole story there. I've got some things that are a little bit more highlighted that I'm going to mention for this week. I think I might try to cover this and then we'll come back to it if we have to. We'll get as far as we can. But this week, you already know I'm calling it. This slide is on the eve of volatility. I'm giving you the 2x reminder here at the top. So this is something I used to leave up there all the time, but we started running out of space. I try to keep it to one slide these days, especially. So the 2x reminder is that just set it to 2x, the speed, and see if that works for you, because I have a bad feeling I'm going to go over. I'm going to remind everyone that hasn't been with us for too long that I have OCD, and one of my OCD, I guess, manifestations is for thoroughness. So I really hate leaving out details when I think I know something and think I should impart that to folks so they have the fullest picture that I do. So it's very hard for me to do short videos because that's just goes really against the grain of, I think, who I am. Just really cuts against the grain. So it's very hard for me to do. That's why I would say definitely go to 2x. And the other thing is that I don't think it's that easy. And there's a lot of things that go on that are, I think, worth mentioning, as well. So that is really where I get left off. And it's so little factors that we've left off. I've noticed, when things have kind of played out different ways, little factors that may have been worth mentioning that I skipped in the interest of time, maybe were, at times worth mentioning. So anyway, that's that, where we stand on all that stuff. The little review time, again, I'm going to stick with dirty stream of consciousness, but just wanted to mention that we probably got close with the scenario. Although, again, in the days of Trump, the scenario I think is harder to really get close to. You just don't know what happens over a weekend. You don't know what's happening on Twitter sometimes, and then you check it out, and then maybe a few minutes ago, after you got closed out on something or whatnot, then there's a tweet there or some report of a tweet. I'm just going to say that I think that with this news cycle and EPS coming up, between that, the tariffs and other developments that are potentially out there in different ways, political ones and others, which I won't even get into. But to me, it could get a little wild and woolly, a little hyper here in the next several weeks. I would say into early Aug and maybe beyond, I don't know, but into early Aug, I think there's the possibility for that. And that doesn't mean volatility, just doesn't mean, or news cycle getting hyper doesn't mean that we strictly go down. I just mean you could get big EPS bursts, Trump initiated sell-offs on the latest tariff tweet, all that kind of stuff. But right, so that's the reminder on that, and I think that's reasonable to come to that conclusion that that could be a more than likely scenario or environment we operate in. The drivers I'm just going to list again because they're still there, right? So there's this is just corporate America passing on inflation, if you're wondering what that one is. Now, basically, it's the same things. We could add, probably, if we really wanted to. I tried to keep this a little bit neater, but we could probably add that, they're using the so-called tail to wag the dog, although the way options have grown, I'm not so sure they're really the tail. They are always referred to as the tail that wags the dog. But I think a lot of people are pressing, their put selling, call buying, and that creates the delta hedge situation, and it also creates, right, just scrambling due to gamma when it starts to pick up, and so on and so forth. So I think there's some of that out there. Unfortunately, right, it's not crazy, so we're not getting a ton of hits this week, but I still think it's there. I kind of looked some things over, and I think there's a little bit of that stuff going on at this later hour in this rally, because we're certainly not in the first inning. Anyway, so we're going to look at the mega caps again individually. There's still some people having issues with them and maybe leading, and that's where all the action is. Probably a little bit more true, maybe just because there's been a little bit of a downtick in breadth and there's been a little bit of a sector slide this week, probably. But it's not horrible, right? It's just kind of the natural ebb and flow at this point where I wouldn't call it anything disastrous. Um, Going to note that AI that we talked about last week in terms of productivity gains, weak USD, very reasonable interest rates, although they are starting to lift a little bit, sort of stealth. So it's worth noting. The leveling out of economic data, in other words, it really hasn't continued to get worse. Corporate America is certainly passing on higher prices, so the inflation's not being really borne by them as much as it's being borne by John and Jane. So that's that. Plus now you've got this BBB, and you've got the Fed that we've mentioned many times, theoretically lowering rates, but the BBB that I want to put that asterisk on there only because the last time I'd listened to something was I think the night before I talked about it last Friday, and I guess they did some arm twisting on that, and that really changed. So that was my source was at least I don't know what that source had to say on Friday, but they were on Thursday night, they were still adamant that this was not going to work out, at least this time around, and it would be delayed further or something. But that didn't happen. So I just wanted to acknowledge that in case anyone was like, "Oh, what about that?" I only had the news, I only had the information from the night before. Anyway, that money's going to be coming in. So all those things are really on the one side. On the other side is what we talked about last week is, right, are the valuations just too high? That's sort of a silly question for especially for modern day bulls, but are the valuations too high just to justify, even if we do have great results and good forward, guidance, are they just too high now to really justify major spikes higher? I don't know. I mean, I'm just throwing that out there to look out for. If you see really good early results and it's not really lighting the market on fire in a good way towards the upside, then right, maybe take note of that, that a lot of it's already baked in. On the flip side, if they really get the goosing going, still, that would be great, right? We would love to get some really big scores and runs. So, news neutral assumption, most likely scenario, aka where are we, what to expect. Look, they made new all-time highs this week. So you really have to admit that the charts are still looking very good overall, although we did get some chill out of breadth and the sectors, which we'll talk about. The most likely scenario, as I said, they held, right? So run. So in other words, we got new all-time highs. We're not finishing, we're not done yet, so they might put a late scamper together, but we might not be finishing at the highest highs, but we're not too far off or of these highs. And so, right, you're not really giving a lot back. So you have to kind of, if you're being objective, I think you got to can come to that conclusion that things are looking pretty good. Q2 EPS season usually quite good. The conclusion, and I don't mean like the technical, but for basically when the big dogs have pretty much reported, most of the big dogs have reported late in this month, early next month. That's about when that would probably be the conclusion, right? Where people are so focused because most of the big dogs have reported. That's has marked short-term tops. And by short-term, I mean for a month or two, right? Nothing really super dramatic. Doesn't mean it will again, just worth noting it has happened several times, especially over the last, let's say, 10 years in my recollection. Just a recollection. I do think the setup, though, seems in place for bulls with having cooled off a little bit in breadth in the sectors, in even pulling back from the all-time highs and not really goosing this week, yet holding like holding in the face of the latest Trump tariff news. So to me, if you're being objective, that's that. I can't say that I feel so great about things, but I'm just being objective. So there's still a lot of super powerful patterns that have not fully played out, right? They haven't fully reached their ultimate destinations as per price projections based upon the patterns and pattern theory and things like that. So there's still plenty of upside if you ask me. But you have to be concerned about the Trump trade deal volatility and other forms of really Trump related volatility. So I just think that's part of it. I did mention this stuff already. Probably worth noting that crypto BTC did powerhouse. So it was probably another lucky, timely mention by us that we wanted folks to keep an eye on that. And hopefully, maybe some folks got involved in certain names or what have you. That happened later in the week. The short term, all these trends remain intact, but the short term trend, right? That's sort of eased, and that you can look at that as a positive or a negative. Like what happened to the what happened to the really starting to run strongly into earnings. But I mean, I don't think it's bad that they took a little bit of a breather here in the short term. Okay, so that's that. Other trends are still intact. The Fed is still trailing. There's still plenty of positive drivers. The news wild card should keep you should keep you on your toes. I'm acknowledging that the Spidey sense is still at the level it was last week. Maybe I would say a little bit higher. It hasn't gone parabolic where I'm like, get out, hedge. But I did say last week I had it as rolling and roll them up. With basically let's be smart after this kind of long run we've had because we're staring at a lot of things. I think in the second half of this month into early August. So I would not play games with risk. I know other people have been saying not to roll. You know, I don't know what to say about that. I guess I would just roll myself. Remain on guard, remain nimble, remain disciplined. That's where I'd be because everything looks great when it looks really great like this. There have been times where in my trading career where it looks so good, that you're just like, wow, it doesn't get much better. Now, I don't think we're at it looks so good it doesn't get much better. I think we're close to that though, where it's if you have a couple of really good weeks, it could look so super good that really you need that pullback, right? You need to come back 3, 4, 5% if you do tack on a lot more here. That would be my way of looking at it. But I do think things could start breaking in a big way news-wise very soon. And it could be in both directions. So that's why I think you should be right. You should be nimble. You should be nimble. If you start seeing, good pops on earnings or drops on earnings because they're disappointed for whatever reason, then Trump chimes in and, all this stuff. It could be a lot of back and forth. If you are undisciplined, those markets frustrate the living hell out of you. That's been my experience. If you are disciplined and you take the doubles, maybe a triple here or there, maybe an occasional home run, and you don't overstay your welcome, and the phase plays out that way, then you feel like a champ. You're like, wow, I'm trading well in a crazy market, right? That's what the difference that discipline makes and being nimble and not really allowing things to go too haywire on you. Okay, so on that note, we're going to shift to a different screen. I'm going to get this stuff out of our way so we don't have to worry about it. And I'm going to pull up some stuff here because I don't think we need to review this. So I might just close out with charts, but I might leave it up there just as a reminder. Let me get the right chart. Where is that chart? Oh, it's over here now. Oh, they moved a chart on me when I was yapping on there. So let's get to our screen two, and this should be good for us. I ought to be able to bring up this over here as a reminder. That should be over there as a reminder for me, and that's good. So I want to make sure I cover things. So what I'm going to do is I'm going to cover the big names, the mega caps, like I said, for starters, because this is where all the weights are, right? We know that. That's why they are what they are. And so let's try to be objective, knowing that there could be a pre-EPS run that starts to launch in some of these stocks soon. So yeah, you know what? I'm going to actually back up and I'm going to show something that I tried to show in UOA Pro with Ryan displaying it for me because I'm old. I'm an old-fashioned old timer in some ways at this point, right? With how I've been charting for so long. As I said many moons ago, I got started in this stuff even before I got to college. I don't know why charts always were interesting to me, but didn't know anything about them. I just started tinkering around and trying to learn something, and I still am tinkering around trying to learn something. I don't know what that says, but Anyway, the line I just highlighted there in blue, this is what I was trying to show. And basically, right, this to me is a big deal. Even though we have a long way to go potentially, this is what signaled to me that this was getting pretty serious in the IWM because of the way that I think about trend lines. And so when we took this trend line out, we backed up a couple days later and we tested just about there with the rising 20 there in light blue. We've been up ever since and away from it, right? And so the trend has continued, that intermediate term trend has continued. And so this is a, I know this doesn't look like much to a lot of people because I think trend lines are really falling out of fashion with a lot of people. But I don't think I could ever get away from them because I think they're too valuable for me. I can draw them mentally, so I don't really need them, but it's still the same principle. But anyway, um, that's what that's what I wanted to see. Then you have this sort of cluster low here where they kind of come back to the 100, but in this kind of cluster form. That's a little bit right. That's a little bit higher than this low. And you have the success of higher lows and higher highs and so on and so forth. And then this breaks above the 200 and then it really goes. Okay, so that just want to cover that. The reason for that is not because we were touting it or anything like that. It's just because, right, this really big, important stock, Apple, I think all of you know how Apple's a very large weight and how important it can be. And it looks like my line got moved here. Oh, that's maybe part of the problem. Oops, sorry about that. We're going to have to reload that. I don't know why that wasn't, that sort of moved on me there. I don't know what happened. All right, let's see. I've had some problems with Thinkorswim today where I wasn't even getting quotes at one time. I was trying to get an idea out there in the service and I couldn't even get quotes to come through. It was really frustrating. I'm waiting to get option prices. I had to switch over to another platform and it just takes, it just eats up time. But anyway, you can see if I highlight the blue line again, we're not far, right, from that blue line. And if you take that out, it's an imperfectly drawn line at this moment. I'm just going to let it go with that. But that really might open you up towards trading up to that 200 day, which is near about 223-ish ballparking it. And so that's the thing. And it has the catalyst, right? That a lot of times they get excited about, and tend to run things up in front of earnings. Not all the time, but they do. It depends on, overall market environment and company situation, et cetera. But that could happen. This high here is right at 216.23. So if you clear there, right, you start thinking good things about it. But the technicals are not perfect in Apple, but if it has a good month here, the technicals are really going to start falling in place for Apple, and it's not close to overbought. So that to me, right, it's there to be taken by Apple if it wants to. Amazon, this was another one we used recently for ideas. It got a little gummed up during these Prime days, so that was a little frustrating. But it's up to 227 now. So just under there, got up to 227. So this really is sort of looking better, like it's on the verge of a breakout, right? And it also has a pre-EPS run potential. You can see the short-term SMAs are all now upsloping and they're overtaking the long-term SMAs. And the long-term SMAs are mostly upsloping with the exception of the 100. And that it looks like it's starting to level off. So that's a good development, right? Right there. So there's two of your mega caps that really look poised and ready to go, and they're not overbought. They're not overbought. So if they can keep the good times rolling, these two could, right, lift because they're not overbought. There's nothing like that to worry about. Amazon seems like it's virtually on the edge of that right now. Another one that's disappointed me a few times, but I can't help but go back to the well is Google, and Google has that possible right impetus right there for a pre-EPS run. This thing has tested and held above the 150, the 100, and now a bunch of other SMAs. And remember, SMAs for me are not kind of the biggest factor at all, but I know a lot of people like them, and I like to describe things in that, and because in those terms because a lot of people like them and it's not complicated to understand or anything like that. But this is held nicely above there now, and it's reversing up here pretty strongly late in the week, and you're really close to a possible breakout attempt. So I would keep that one on your watch list for next week. If any UOA comes in, I'll put a fresh idea as a bull in there in a neutral to positive market in a heartbeat, just because I think that looks primed to go and it's not overbought. These are not overbought stocks. So everyone that's saying, right, that hey, it's just too narrow. It's all there's a lot of them that just haven't. My point is, yes, some have really gone, but not all of them have really gone. We just the first three we looked at have not gone. Now, Meta had a little bit, right? That was acting better last week. After the success it's had though, right? It's understandable that it chills out. Tested the 20 today. In light blue, they've been able to keep it away from there. That does look a little bit more vulnerable. Clearly, you got the lower high put in. You could be breaking support. So I think that's one you have to be on guard about until you start to see it lift back up towards right the closing high of this week, which on my charts is 732.78. So 733. If it starts getting back above there in a bullish market and a lot of the other mega caps are acting well, I think you're looking good. But definitely that one's got the vulnerability that the other three did not. Microsoft, right? This thing just refuses to really back up. It just every time it gets near these short-term SMAs, they just seem to provide support to it and it just holds. And so it's actually with a good close here today, it actually could put the highest closing high together that it's ever had. So I think as of right now, it just needs to move up maybe like 50 or 60 cents to do that. So, I mean, how can you say something really bad, especially when, if you look at it, it flatlined for a while. So again, it's not that overbought. It's a little bit on the overbought side because it just didn't pull back enough. But at the same time, it's really not that overbought. So I'm not intimidated by going long that because I'm not in the 80s or something like that on daily RSI. Let's see. Our next one would be NVIDIA. We can check that out. Right there you go. That's making a new all-time high today. And so it might even be making a new closing high today. And so that one is overbought, though. You can see that's outside the upper Bollinger Band. You can see on the daily RSI, it's near 75. So it's getting a little overdone. There's slight negative divergence there on the RSI versus the prior high. So that is a little concerning. And on that note, I'm going to bring in a chart that I want to show that's related to this as part of this week's chart storm or whatever you want to call it, chart fest, doing so many things here. But I know that I'm jumping around, but I think all longtime viewers know I can't help myself. And that's just part of the pain you have to endure. But yeah, so here's a long-term chart of SMH, and all I'm really pointing out here is that this is really this rising, right? This kind of like rising triangle, rising wedge, some people would call this. And you could say, well, I've seen this thing rise at times and before, and it has, but this is pretty vertical and it's getting pretty narrow. So you don't have to get into a panic mode at this very moment, and there certainly is more room for this to keep going. But just note that this has really been a very long, extended run without very much in the way of a pullback of late of any real significance. It's starting to work its way into this narrow part. I still think it has potential to keep going there, so I would not short this. I just want folks to appreciate the fact that this is quite vertical, quite extended. And so again, what would I do? I would be a roller, right? Even if you're a long-term bull, if you're trading in the short term, the long-term bull almost doesn't matter because you're operating over the next, let's say, week, day, couple of days, 2 weeks, whatever the case may be. You really have to operate in ways that are pertinent to that and evaluate the same. And so, yeah, I would say, look, if you get more push here in this whole SMH, great. But know that, this is probably not something that goes on for too long without some kind of a break. That's it. And that's why if you get good scores and you still like it, depends on how overbought it gets. But you got to go from 80 delta or even 90 delta if you let it run with a higher delta, and you got to get yourself into something that's far lower delta at that point if you have had a dramatic pop, right? That's all I'm getting at. Avgo, another really big dog, right? That's part of this mega caps. We talked about that last week. This one, kind of taking a little bit of a break, but it did put it an all-time high, I think, yesterday, right? So it's when you look at these things, all I'm saying is let's look at what we have, and we'll look at another one from last week, JP Morgan, right? JP Morgan had a nice, this made a new all-time high last week. It's backed up in front of earnings. As I think we may have mentioned, right? It was outside the Bollingers. Wasn't too overdone, I don't think, at the time, but it might have been. I'm sorry, it was overdone at the time. It was 82 on the RSI. Now it's not overdone. Right now, it's backed up decently into the 60s on RSI. So if you're trying to put a pop together from 82, that's harder. If you pull it back and you now are riding this 20 upsloping 20 there in light blue nicely and storing up a little energy, you might be able to start moving up early and then pop right in a bigger way. Net from where that closing price is, let's say the day before earnings. But I mean, that looks good. It doesn't look bad yet. You need to see it take out this week's low that was it made before you're really starting to worry about it, in my opinion, just because, right, my assumption is, just for the record, my assumption is that stocks keep trending until they don't, right? So I'm going to try to give the trend the benefit of the doubt, excuse me. I'm going to try to give the trend the benefit of the doubt because that's how the market works, in my opinion, right? If you keep giving the trend the benefit of the doubt, you usually in a bull market, it usually works out very well, for you ultimately. So here's a nice pullback in Netflix. Another one, right? Last week that was in 79. You know that I talk about these. I don't panic at 70, but when you start to get towards 80, you have to, I think, really take note of that, because it might not mean that you pull back. It might just mean that you go into a pause. And so what I would rather do if something does pull back is sort of set an alert back up near, near but under the high. And then if it has a mild pullback and starts working its way back up a few days later, maybe later that week, then you've got a situation where things have chilled out, your RSI's backed off, you have more energy potentially because you slowed your pace to keep going. Okay, so but that again, long-term uptrend, would expect the 50 to hold in a good market. You've got the earnings coming out, so if they want to now take a stock that was doing great and then have a really strong earnings pop, it's again probably a lot easier to do that after you've had a pullback. And then we've got Tesla. Okay, and so we had this one. Unfortunately, we had this as an idea this week, and I thought it could pop back up towards the 200, and it almost got there, I think. I don't know. We had it as an idea, and I was thinking they're going to try to get to the 200 if they take this up, because we did have UOA up here, and it was on its way, excuse me, on Tuesday. And then Elon, much like Trump, Elon did some Elon stuff on his own platform, and that kind of created a setback, a momentary setback, and we got the resumption. So the only reason why this is a problem is because without Elon doing that, we have a lot of newer folks in that particular service. I think it was UOA Essential, and it would have made it a lot easier for people that are newer to this game to just stay long, and instead of having to maybe get out and then re-enter, which is, I'm guessing, a lot of people probably had to. Tesla's probably your odd, let's say, stock out. So its charts do not look as good as the other ones, clearly, and there's all the Elon factors, and you've got the EPS coming up. So this is probably, one of your bigger problems, but I think a fair assessment is that some stocks that haven't ran, they look like they're ready to try, and they're big ones, and they're not overbought. And some that did have pulled back nicely, and therefore, if the gang wants to goose those, they're going to be able to goose them from lower kind of chill out levels, and they could get this going. But you could see that not every stock here has really, it's not all just about the big boys. This market is, I think, you got to give it more credit than that on the breadth, right? Which, speaking of breadth, you don't get the kind of decent breadth to good breadth that we've seen if you're not getting more stocks participating. And I think when we look at the sectors, we can see that some of the stocks in so many sectors had to participate for things to work out as well as they've had, right? With advanced decline, cumulative averages, the performance of stocks above their certain SMA, simple moving averages, like the percentage or number of stocks that are above there, right, in the SPX. So this has been getting better. This has generally been getting better and better and better. We're just off the highs, where we were. And that makes sense because we kind of have seen a little bit of maybe chill out in front of earnings, and we've seen a little maybe rotation or repositioning. We've seen a little bit of sector stuff happen. Maybe some folks decided to take some risk off the table, thinking that they're not sure how the earnings season plays out, especially with Trump and his keyboard, always lurking in the shadows. So that's just something to think about right there. I think you got to be. I'm a little concerned. I've got to admit it, but at the same time, the melt up. We've seen melt ups too, but the breadth really has just backed off and slid a little bit since we're on that. Let's bring that up, and I think I'm going to chart a lot of these other things in larger format. But I just want to note, right, that just put an energy idea in. So that's part of my spidey sense, sort of probably that this has been doing better. Had a couple energy names this week. Put the XLE idea in itself today. Leadership sectors, they went kind of into sideways to chill mode. Again, after the success they had, that's not the end of the world. But again, maybe they're storing up energy for bigger runs. Financials did the same a little bit, but they're about to report. So they could really, lift the roof off of this thing if they like what they hear and see. We also talked about this week in one of the webinars that I really like the potential in this discretionary XLY. And I think that would be a really good sign. But it's kind of interesting, right? Where you got energy going, maybe geopolitical, this on the brink of breaking out, and look, XTN, this thing is, we talked about this one too, looking better, and they tried to break it out. Maybe it's pulling back now. Couple of big winners, diamonds type, Dow type stuff, names, XLI, XLB, historically anyway. Those, have done very well, and they're just chilling, but they're really just one day removed from all-time high. And I guess energy demand, which you'd expect, seems to be high with XLU. So I'm going to bring these charts up and see if there's anything we can note about them. I think it's worth doing that at this juncture, and I'm going to talk about some other things too. But to me, when I look at things, I just don't see objectively that there's major problems yet. Are there little things that are a little more concerning than last week? I would say that's true. I would say that's fair to say, yeah, it's a little more concerning, but do you really want to read that into it when it might just be what we've already discussed as the reasons, right? So let's do the 4 lot first. We'll take this, we'll bring this over, and you can see here are my the 4 major index ETFs. And again, we're just a session or two off of all-time highs in the Qs and the spiders. Still, I guess, a little tiny bit under in the diamonds, the all-time high. But this chilled out this week. It found the 10, 2-3 sessions. It's right there right now today. It needs to hold from there at these levels and not really make a new low for the week. But if it does, and they start, they come in with their typical right over the weekend happiness that Trump didn't tweet anything negative about anybody or anything, they could try to get happy, especially if those financials earnings start to kick things off, and that's what we want to mention. Those are due, but the big dog these top 2, those are still they're acting exactly like you want things to act, which is they're clinging to the highest simple moving average levels. There's the 10-day. I don't know why it's a dot on this one. It might be something I did, but I don't want to worry about editing that right now. I might have clicked something by mistake. But anyway, that's still the 10-day. It doesn't really matter, and it's just holding there. So you just can't really say much in the way of bad things about that. So I'm going to go through these sectors because I think, and some other things of note, because I want everyone to see this. I just noted that I just put an idea in about this. This is close to making a new multi-month high. and it could certainly close at a new multi-month high. So this is poised. There's a gap here. It's well off the highs, right? This has been one of the missing elements for things that you like to see, energy flowing and being in demand in the economy. Could be that, could be geopolitical, could be both, of course, probably is. But the charts look good here, not overbought. I think if it has a good month, it's really on the verge of turning things in a big way. And I know that it's been pressured for quite a while, right? So let's look at a 10-year on this thing. And it's been a little while that you've been meandering, right, and correcting. So you're not back towards the highs. There's 10% to get back towards the highs. Think of what they've done with the stock market since this thing put its high in. So basically, right, the consolidation that's gone on here for really a few years, if you want to could call this a false breakout, which it kind of was. Man, that's got some energy stored up. Not meaning to create a little punny thing there, but it does. So now let's look at XLK. We're on the big picture, so let's stay there, right? And I think the problem right now for XLK is that you're getting a little bit towards overbought. You're just not there. And the run is certainly looking right extended. It looks a little vulnerable because of the vertical nature. We did get that V recovery when you look at it this way on the weekly. But that's the weekly that's approaching overbought. I meant to do daily, my bad. Let's just get a nice daily chart in here. So this has been up there, right? On that day right there, you were at 73, 74 on your RSI. So it got a little bit into the mid 70s. Again, I would take note of that. And if you haven't rolled lately and you still like the action and you think you want to roll out, I would certainly roll out, but definitely roll up is my point, because you give less back, right? If you start to see a breakout and you like high delta calls, you can always roll down when it starts technically setting up to really power if that's your style. Unless you feel like you're over trading. It's everyone has to make their own call. Anyway, XLC, Meta not having a great couple of weeks. So this is getting pulled down, likely due to the Meta. You're still holding the 20. They reversed it off the 20 there. It's backed off. It's not anywhere near overbought, right? So again, if they start to lift this up and get back above the 10-day at 107.30, this thing could be making a beeline right for the highs if the market remains buoyant. XLF, let's take a look at, XLF. Let's take a look at that one. Same thing, right? Nice corrective action, holding on, right? And probably now it's just going to be, let's wait for these EPS and then see what happens, right? That's probably where you are. You're not anywhere close to overbought at this point, anywhere you look. So if they want to, it's there. Now you could say, well, how come we're not talking about the downside? We could talk about the downside. I'm just saying I'm kind of favoring the trend still because the charts are still hanging in there objectively, right? I'm not saying that we can't have more corrective. I mean, my spidey sense and my nimbleness reminders and discipline are all part of that. I'm just talking about if the trend continues. XLRE, right? This has been a no-go. It's sort of defensive. You can't really say much about that. Same thing with XLV, right? The last few months, nothing really to write home about. So we're just going to leave them as they are. XLP, you might think, well, this is a bad sign. This is backed off. But I would say what this means is that the market is starting to slightly tilt towards riskier, right? So they're willing to get out of maybe some of those staples and get into these discretionary names. And so this is trying to break out above that line right there. And if you kind of look over, and I'll put that line there just so everyone can see what I'm talking about, and then I can make other little points about this. Break out above, come back, rising 10, and the line get tested. So now that former resistance becomes support, and they're trying to bounce off of there after sort of taking the very short-term overboughtness out of it. So this is starting to work its way up, lower 60s on the daily and only at the 60-ish level on the weekly. So this has room to run, and it could be right due to retailer. They might like what they hear in terms of what's coming out of these retailers in terms of results and forward guidance. So the other one, right, let's take a look at XTN. That probably needs to pull back and do the same thing. It did do a little bit of a minor breakout pull back to just above the 200-day from where it really broke out from. If you believe in the 200-day, that is. Now you got your rising shorties lifting, right? Everything's sort of starting to flatten out on the long terms, and you might pull back a little bit more. But this would be really key, right? If this thing continues to participate and go, and it's not overbought in any way. So I'm just making the point that a lot of these things as of right now are not. That's a key sector in my book. These are not overbought. A lot of them are just not overbought anymore. So that does set up from sort of the overbought, oversold RSI reading, whatever you want to call it. I just tend to use RSI because I think it's just reliable and a lot of people are familiar with it. But look, it just that tells me that they want to punch this thing higher. They're not doing it from a crazy level in a lot of cases, right? So here's one nice little sideways-ish action, nice little pause, as I tend to call it. You got your rising SMAs, you're above the 200 in purple, right? And you got near your upper Bollinger, but you're not too bad because of you've been sidewaysing for so long here for like really a week and a half. So that looks okay as well, and it's acting well, right? That's why the diamond's like making a new all-time high. I don't think you could be shocked by that if that happens in the near future. XLI, right? This is a little bit more extended. You could see that you were at 71 on that day. Over here, still at 72. I guess it depends on what RS 75 on this chart. I'm sorry. On other charts, I've got their set up a little differently. But anyway, right off you're right off the high. This is acting well. This is a little overbought. So, that's a little bit of a different story. But look, you're just one day off of the all-time high, and then XLU, which again, I could argue this one in a lot of different ways where it used to be pretty much just treated as utilities and this and that. But really, the way these SMAs are shaping up, there's not really a lot wrong with that. I mean, it's on, much like we were talking about with Bitcoin, it's right there at the starting line, I think. It just needs to start pushing a little bit more. And if you hear, big hype on, we're investing in this, and it's, and the people are like, wow, there's a ton of energy demand, even more energy demand that's going to be coming online as a result of this recent corporate commentary, blah, 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 blah. There you go. So if you want to talk about a nice strong push, then a consolidation where you don't give much back, you work off the overboughtness, and now you're poised to maybe challenge the high. It's there. I mean, I think this is a good looking chart. It just has to start going to create the momentum. So that's the rundown on all that. However, right? However, now we're going to look at things we used to look at all the time, not all of them, but a few of them. And you're still mired in a dollar downtrend here. And there could be some just utterly insane things happening with the dollar. But at the same time, right, markets usually just don't go in a straight line forever. And this thing looks like it could be maybe trying to put a little bit of an uprising together. So to work back a little bit. So that's not the biggest deal. I don't think that it'll matter to the market all that much. But typically, right, you all know that when you have the market, the dollar dropping, the market tends to rally. So there's kind of an inverse relationship there. Just want to mention that for if these earnings are not going well and the dollar picks up some steam and keeps tracking higher, could be a little bit of an issue. It could be due to something like a Japanese carry trade, yen carry trade, Japan issues, funding. Also, TNX, we used to talk about this all the time. It too tends to be counter to the equity market, where you tend to get this, moving inversely. But look, this thing's maybe breaking out here. The yield, I know we're charting the yield. I get that. I'm just saying the yields are breaking out maybe. So you got to be a little bit careful here. I haven't talked about this in a very long time because people get probably their eyes glaze over, but it's important stuff. If you ask me, probably a lot of people feel that it's important, but a lot of people don't like to talk about it. It's kind of boring stuff. We're not trading it really, but this is something that I would just say, wow, it wouldn't take much, right, for this thing to start moving back up. And that's probably a little surprising because, right, people are expecting rates to go down. That's the consensus, I think. And maybe if rates are not going down, that's not good. Okay, so just kind of keep that in mind. Let's also talk about, as it relates, right? Let's talk about XAU here, right? With the other stuff we're talking about, and this also is working its way back up. It's worked off the overboughtness it had here, right? It's approaching overbought in on some big picture charts. We've talked about that for a while. I'm not going to go into the 20-year chart that we talked about here in SLV, GLD, other names, but look, this thing this really hasn't gone, and the futures and of gold and silver have really lifted, and I continue to be long, gold and silver, not to the extent that I was, but I was continue to be long these things in different ways, and I'm physical too. And anyway, the point is, this is on the doorstep, right? It's on the doorstep again. So this is very interesting with all this happening, right? Where physical metals and their well, the ETFs sort of by extension, although you'll find all the information you want on how this is heavily manipulated. But we've had an idea in here. I made sure, because I did not want our folks to miss out, I made sure to put a very long dated diagonal to get started with idea in for SLV this year. I think it goes all the way out till November, just because I did not want to miss. Well, I guess I have to flash it. There's no way around it. But you can see that there's this cup and handle with sort of this other cup or extended protracted handle, and it's starting to reach our big time fib projections, right? That's why I've tried to keep it active for so long, so that folks know that it's a real idea that we believe in. So anyway, there's that as well. And so that's kind of wild, right? With what's going on there. We already talked about Bitcoin last week, and how that was, we thought maybe at the starting line. They took their time on it, but as the market kind of pulled back, so did Bitcoin early in the week. And then they got their hands on it, and they're doing stuff again with it. So that also cooled off for some time after making this new high. And now they flatlined it, consolidated it, held on to most of their gains. All the stuff we talk about a lot. You've got all your SMAs stacked and sloped. They're all really working well. I'm sorry, you got to get the 100 above the 150 right there. Then they'll be all stacked and sloped. But overall, right, that looks really good. And so, is it a little short-term overbought? Yeah, it probably is. If you wanted to look at something like I don't know, a 2-hour chart, it's probably overbought, would be my guess, with this kind of a punch today. But just in case you don't know, Ryan alerted me to this a couple days, was it yesterday, the day before? I don't remember. As soon as he told me, I had just in life, I'm just have a lot of stuff happening, and I, I really wanted to get my hands on this with options, but they don't offer them. But anyway, I ended up buying this yesterday because I wanted more exposure. I had exposure with this, but it's this XRP ETF. I'm not a big fan of the vehicle, but you can, I really wanted to buy several in the money calls and start out with a 2x1 diagonal, but I can't do it. They do have a leveraged one, which Ryan pointed out to me. I think it's XXRP. Let me see if I can get that to work. Yeah, so of course I should have gone with the leverage, but I don't like leverage ETFs. I prefer not to have those, and I didn't know it was going to go haywire, on day one day plus one from when I bought it. I don't know. I mean, I like the chart, or I wouldn't have done it. But I'm just saying I didn't know it was going to do this. But anyway, this is the one they have options on. But I did not like. I was very intrigued because I really would rather get involved with calls. I prefer to have calls. I went and was looking at the first few months out there, and I'm just going to quote these off screen. But to give you an idea, they didn't even have enough strikes listed for one. Like it was kind of crazy because there were no. In fact, they still haven't added enough today. So they're not adding strikes enough, and they basically only had in the monies, and that could have worked for me. But I was like, what's going on here? Why are there not enough strikes? Who's asleep with this? I don't know what's going on. Why they don't even have, like, for example, the 15 AUG expiration, the highest strike I can find is the 37s. unless something's wrong with Thinkorswim right now. That's it. And by the way, those are nearly $2 wide. The 36ers are nearly $4 wide. So it's super immature, and that's why I just said, oh well, I'm just going to go buy shares of the XRPI, which is what I did. So I just wanted to let you know that if you were kind of like buried in life like me, that you know that XRP has an ETF now, and I kind of do. I kind of knew it, and I just forgot about it. And just Ryan reminded me. He's like, "Dude, you can do that if you want." I'm like, "Oh yeah, you're right. I kind of did. I'm like, I think I knew that at one point. That's how wild it's been." But don't want to get bogged down in that. I am not a crypto expert. All I do is chart stuff, and if the chart looks good, that pulls me in, because I just again, that's just my preference. But here's the VIX, right? So if you're looking for something to hang your hat on, the VIX is plumbing levels or near plumbing levels, up the lowest levels of the year. But again, with all these positive drivers, if they get the kind of burst in earnings season, this thing could really get smoked, and we could have the dog days of summer effect. So the news wild card is probably the only reason why you're not there, because I think there's so many positive drivers that the only thing I could think of, like I said about earnings, is that the only reason why they wouldn't work out would be they ran them too far. I think my gut instinct, and this is all gut instinct, but the way that I see prices out there and the way people seem to still be spending, um, and with Trump theoretically repatriating manufacturing jobs and so on and so forth, and this BBB and all that stuff, it's going to inject even more money. Like every administration just keeps injecting more money into the economy. It's almost like administering one of those EKGs. No, not EKGs. What's the other thing where they do the old shock? I can't think of it. Shock the patient on the operating table to bring their heartbeat back. I forget. You know what I mean, though. But that's what I feel like we just keep doing with this economy. Like no one, no one cares at this point. It's become so old news to just keep injecting, whatever billions, trillions, whatever. I don't know what's next, but anyway, so this is sort of like telling you that a lot of people are not worried about risk right now, and that's the final kind of reminder here, is that when it gets this way, right, you have to then not be blind to that. You have to be cognizant of that, knowing, right, that a lot of people have been lulled, and we can see that in the markets. And you've got things like, you've got crypto starting to go, and you've got the metals going. It's really, really a very, very interesting mix where everything seems like it's lifting. And you could say, well, that's because they just keep devaluing the dollar. I can't disagree with you. That's been the MO for over 100, maybe longer years, for all I know. But it certainly accelerated over the last 100 years, it seems, especially in recent times. But yeah, I mean, I think that's the thing. You've got the VIX on its back. You've got everything looking pretty good on the charts, objectively speaking. And so if you're going to go, I'm going to say that you know the odds are Trump doesn't, no geopol, no Trump stuff. I think they try to just keep taking them up, and maybe we just don't see major beats where they crush it and the stock explodes. Maybe we see kind of a mild reaction, sort of a reasonable reaction for a change. Let's not forget that could play out that way. And that would just really still tack on probably a good deal if earnings are good across the board. But I wish I had more to offer to everyone in terms of earnings. I do not. I just don't know. I don't have the time right now. Someday maybe I'll be able to get back to my old ways, but unfortunately it's just not in the cards for me right now. So on that note, I'm trying to think if there's anything else. Oh, if you want, yeah, I guess what I could do, and you could just tune out if you want to, but I'll try to quickly put flash some levels up from our prior projections. And so let's just remind on the upside, I'm going to do what I did last week, just in the interest of time. I'm just going to say, let's stick with, you can see the rising SMAs and, former highs and things like that. That's what I would focus on as your levels down, in the 20 day, the 15, so on and so forth. But on the way back, on the way up, you've got 620, call it seven, which is only very slightly higher than yesterday's high. And then your 639.56 would be the next one. So I'm sticking with that, because they seem to have respected the 100 pretty strongly once we've gotten here. You can see there's a lot of touches on that. So I'd stick with that one. Next big one's going to be our Qs. We're going to do the same thing. Look to the downside, for your SMAs for support. Once again, the 100 fib projection kind of being respected. It looks like it worked out. So 563 will be your next one should you exceed the high, and then 574. And to me, like these are reasonable projections. These are not, to me, unreasonable ones. By the way, I did put an EWC. I'll go to that EWC bear idea in just to have something in our log. We saw some paper, and IWM, which as you all know, I've sort of been harping on that a little bit because of the good stuff that I thought I saw in the charts. But yeah, so let's go back to Qs. But anyway, the you got no, okay, we didn't have the Qs, my bad. So we're going to go with we'll go with 563. After we get through that high, we'll go with 574. And you can see on the downside, you can see these levels are over here. So you're going to have 547 with the 15. The 20 will be near, it looks like, wow, it's not showing 543, right? So those are levels that I would look to on a breakdown for whatever reason, which I would probably guess Trump would be the culprit if that were to happen. Let's do the diamonds. And the diamonds, we've got a couple different ones, and they're very close to being the same. So I should almost eliminate them, but it's probably better if they're bunching up. And that's here and here. So the next couple levels up there, it almost got right to this one on last week, right? So wow, it did. It got really close, just within pennies of a higher dollar index. But yeah, 451.90 if you get beyond last week's high, and then wow, it really jumps from there. So 465-ish almost, right on the upside. Downside, you're going to be looking at about 439, and then here it looks like it's about call it 436, right? That's what I would look to, and probably, yeah, I mean, it's not a surprise to me because I think there's not only fibs on this week's lows, but there's also a flat line-ish level over there from prior price action as well. And that's going to leave us with IWM, and then I'm wrapping up because I know everyone's probably already mad that they sat through this. But let's see. Let's do your support first, right? I think you got the 218 with the fifth. I'm sorry. The 10-day is 220.50. That's my trigger to the downside, by the way. The 218 level, and then your 20 and your 200 dovetail. So you have to respect that. That's going to be at about 216. So those are the levels I would look to the downside. I'd be surprised. It would take real news, I think, for it to just shred right through there. So, but let's drop a projection on here, which is not that clean now that I'm looking at it. Not that clean. Um, hmm. I can't believe I'm kind of stumped here on that one. I think the reason I'm not going with the obvious one is because it's not going to give us enough. I don't think we're going to get enough levels out of this, but maybe I'm wrong. I'm hoping I think it's going to be through our levels too much already. In other words, let's see if it lets me draw one here. Draw one here. Nope, it doesn't like that. All right, let me try to come out here with it. And try to come over here with it. Oh, it switched tools on me. No wonder why I'm struggling. I thought I had the fib projection on. Maybe I misclicked. My apologies on that one. And I'll just leave it alone. I won't take it to the penny. But yeah, that was kind of a little bit what I was worried about. I think you're gonna have to use the former high, right? That this week's high of 226, and then you're gonna have to use 229 the way it's going right now, which is right near the former high. So that sort of makes sense. Your support, again, this is my breakdown level. the 10-day, and then you've got your 15 and your rising 20 and 200 confluence right there. And that's what I would stick with for that one, the 216 level. So I hope that helps. I don't think there's anything else I can mention. I'll just wish everyone a great weekend if you get to watch this early, and hope you had a solid week. Probably a tougher week, but you might have set us up nicely for some earnings pushes if the right kind of news comes out, and the wrong kind of news doesn't come out, over the weekend. If we're set up and they get the results and they can have some fun, that could be really the time to really catch some great trades the next few weeks. And then I would say from that point on, you may want to be real selective about staying long in what would then be a very overbought market at the wrong time of the year. That would be my just gut take on it. So on that note, wrapping up, I do hope that something I shared with you helps you out this upcoming week or some week in the future. And thank you for tuning in. Everyone stay well.